money.
Now, on Monday, we talked about the various ETFs, which brings us to Sector Spotlight, because we want to check that temperature again to see if it's changed, gotten worse, what it means.
Right.
So let's start off with retail. I shudder right now to ask, but, you know, continues to go down here. Even Target, which raised its dividend yesterday, still ended down. How much worse does it look?
Well, let's take a look at the RTHs. We've talked about it. We've talked about the negative divergence there. We've looked at some different patterns here. We've tried to give you as many warnings as possible. This was your big warning. This was when this uptrend broke. Look at this uptrend that was enjoyed for about 3 months. It broke, this upper level broke, and then it's now cascaded lower to support. But I do think that all things are going to start to get to their 200 days, so we still have some room here. But we're very oversold. I would say if you're short retail, time to cover, or hopefully you covered yesterday. And then let's look to see what stocks act best at their 200-day moving averages.
But not ready to get them for the long term. All right, let's go to the semis, the SMH. We have Nat Semi coming out with earnings after the bell today. Of course, it's getting bought by Texas Instruments, which pre-announced yesterday, guiding lower revenue estimates for the second quarter. Geek.
Well,
neither of those things sound good.
The SMHs tried to hold up best, you know, after tech already started to go lower. We could get some action today because of those earnings. It was down like 5% after hours, and now it's flat, I think, right on Texan? Or not? Somewhere.
Yeah, it's flat. It's up a tiny bit.
So, you know, it's still above the 200-day, but it's at a very big point of reference here. So this could be an area to watch that if we do try and bounce, we don't get to 1250 yet, there could be some action in the SMHs, but I would definitely not be so frisky there.
All right, what about oil? You're frisky with oil. As we know, OPEC did not agree to release more oil, but, you know, Saudi Arabia could do it on its own. Just as a group, they didn't say that. And energy popped yesterday. What do you do with this right here? This
is the one that I'm targeting because it's above all the moving averages. All those other ETFs are getting close to their 200s. I think this is around the 50-day or above. So that shows me, or it's right around there, that there could be some strength when this market decides to go. So we are controlled by a descending channel. We still are above this previous pivot. I'm going to watch it and then see if there are any really strong stocks in that group as the next few days develop.
All right, so not quite there yet. Let's go to the IYT Transportation ETF. It looks even worse than Monday. Is this true?
Yes, this one has been obliterated. It's just, actually it looks the same as everything else. This was your upper channel. This was your exit when it broke support. Now we're coming into a bigger support. Again, looks like all these patterns are the same where we're at support, at bigger support, but we're not yet at that 200-day. So the question is, are we going to go to the 200-day first or get an oversold bounce that could be shorted to then bring it to the 200-day? And that's what traders are going to be going with or trying to see what happens over the next day or so.
And as the transports go, as goes the Dow, right? That Dow transportation theory.
Yes.
All right, let's round it out with the XLF. I don't even need to ask. I mean, it's up slightly today, but really the banks have been getting so hammered. Just can't get out from under this, in particular Goldman Sachs. And as we heard, the credit card amendment was defeated in the Senate yesterday, so now banks are going to have to deal with a fee that's 12 cents rather than 44 cents. That's a big deal. We're looking at like $15 billion here of losses for them.
This group for the last year has been such a disappointment. But, you know, it's a rule to follow if you just take the banks and your likes and dislikes out of it. This group has been weak. It's been avoided for a year, even the last few months. And now, you know, we've just looked at 4 or 5 other groups that are above the 200-day. Take a look at this ETF. It's through the 200-day. That just shows you the relative weakness. Here is that 200-day. We're well below. That just shows you how weak this is. And you see the top here, ascending channel, break to the downside, ascending channel, break to the downside, major support, pow. So that just shows you.
Real quick, where's support at all?
You got to look all the way back here to about 1430. That'll be the next area for the XLF that could provide, you know, some type of bounce, and we'll have to measure it as we go.
All right, we will be right back with your stock picks for Thursday. Stay tuned.